Welcome to Investor's Guide. Happy New Year to you and your family. I hope this is the year when your investments prosper multifold and you do really, really well. Remember, on this show, we try and help you with everything to do with your money. We've been doing it for the last 7 years. And I know that this particular episode that we do every year on New Year's is our most popular episode and our most watched episode. So I'm going to give you a second to pick up a pen and paper, because in the next half hour, we'll tell you which mutual funds you should be investing in the year 2016. And we'll go category by category. But before we do that, let me bring in Dhirendra Kumar, who's actually picked out the funds for us like he does every year. Dhirendra, Happy New Year to you, and thank you for joining us.
Thank you.
Tell us what the criteria has been for you when you picked funds this year. I've noticed there are a lot of repeats from last year, which is great. It's good news for those of us who've invested in those funds. Anything changed massively? We did see midcaps do really well in 2015, but has your criteria changed in any way?
No, not really. In fact, there is a little bit of tweak here that, the mid and small cap universe, which was consolidated, has been split into two, simply because, there are more clearly defined small cap funds or, micro cap funds. And there are now more clearly defined mid-cap funds. So I would say that, the funds which are not in our recommendation list and they were there last year, I don't think one should get on to, redeeming those funds.
All right, let's take a look first at the first category of funds, and these are multi-cap funds. Right on top, Mirae Asset India Opportunities, Franklin India Primark Plus comes in at number 2. And ICICI Prudential Value Discovery comes in at number 3. These are the top multi-cap funds to invest in the year 2016. Now, Mirae Asset India Opportunities was number 1 last year as well. It continues to maintain that position. Interestingly, Dhirendra, last year in number 3, we had ICICI Prudential Dynamic. You've replaced it with Value Discovery. Tell us what the difference is between these two funds, and why does the Discovery fund score over the Dynamic fund?
The Dynamic Equity Fund remains a good fund, but by its design, it is supposed to be making an allocation call based on a formula, and the equity allocation can change quite substantially. Compared to that, this fund is likely to be fully invested, and I generally have a preference for a fund which is supposed to be fully invested based on its mandate rather than taking an allocation call. So that's one reason. The other is that, this fund is not only among the multi-caps, but if we look at alpha, the measure of how a fund manager is beating its benchmark and how consistently, what is his value addition. These three funds, in our multi-cap category are score very high on that. And that too over a full market cycle, not necessarily based on 2015 performance.
I also very quickly want to ask you about the Quantum Long-Term Equity Fund. It was at number 2 last year. It doesn't make the list this year. I know that during the course of the year, you were a little disappointed with the performance of this fund. Do you remain disappointed with Quantum Long-Term, and should we continue to hold it?
No, that fund is an impressive fund, just that it is not the finest fund in this category. That's why it does not find a place among the top 3. The one thing which I quite heavily, quite disliked about the fund was its cash call, because I would expect an equity fund to be reasonably invested or almost fully invested in equity, because that is a call which I have taken. And on that count, I think that fund can actually turn out to be a little disappointing. Sometimes it can be a valuable bet. But so far, I have seen, last 15, 20 years of my understanding of equity fund is that nobody has been able to take a good call on the market generally, ever.
All right, so these are our top multi-cap funds for 2016. If you're looking to make an investment in a multi-cap fund, for those of you who don't know, invest right across the market and do not limit themselves to large or mid or small. It allows the fund manager to invest across the market. Here's the list again. Mirae Asset India Opportunities coming in at number 1, Franklin India Primer Plus coming in at number 2, and ICICI Prudential Value Discovery at number 3. Moving on to equity large cap funds. At the number 1 position is the Kotak 50. The ICICI Prudential Focus Blue Chip comes in at number 2, and Religare Invesco Business Leaders comes in at number 3. Dhirendra, Kotak 50, again, it's been an interesting fund. We've had our eye on it since, since we started this show. Tell us why it's made the list and the top of the list this year.
I think it has got its momentum back, and even in the years when it was not looking at the finest large cap fund, I don't think it was a disappointing fund ever. Yes, this is a focused fund. This is, it limits its investment universe, and it remains a large cap fund by design. Here the baseline is pretty straightforward. Every investor has a choice of investing in an index fund that comes at a lower cost. It comes with a predictable performance, and you are assured of matching the market, matching the benchmark, if not beating it. So I would expect that a fund which is configured to beat its benchmark definitely should be a choice. And what you were mentioning while listing these funds, that 1, 2, 3, I don't have that order in my mind. These are relatively, these are the best, 2, 3 large cap funds, not necessarily in that order.
All right, not necessarily in that order, says Dhirendra Kumar, but I'll give you the list one more time for anybody who wants to write it down. Kotak 50, ICICI Focus Blue Chip, and Religare Invesco Business Leaders. Dhirendra, Religare Invesco Business Leaders is a newcomer on this list. We've not talked about it much on this show either. Tell us why you find it interesting, and what makes it interesting for this year.
No, this fund was on my radar. It was just completing its essential threshold track record, and it has turned out to be very impressive. It has beaten its benchmark, and by its design, it will be in very high quality business, because in respective industry sectors, it will be in companies which are leader. And that, I think, the phase of market we are in, I don't think we are going in a these will always dominate drive the performance, and that particular focus, well articulated objective, and by its design, a large cap fund. So that actually impresses me.
All right, so those funds are on your screen one more time if you want to write them down. Let's move on now to mid-cap. Like Dhirendra said, over the last couple of years, we've been doing small and mid-cap funds together. This year, we're splitting it up into mid-cap and small-cap funds. So mid-cap funds, equity mid-cap funds that are of interest if you're making an investment this year. BNP Paribas mid-cap, Mirae Asset Emerging, Blue Chip, and the HDFC mid-cap opportunities. Again, Dhirendra, HDFC mid-cap opportunities has been on the radar for us for a fairly long time. That fund continues to remain interesting. For the other two, BNP Paribas mid-cap and the Mirae Asset Emerging Blue Chip, what should investors keep in mind if they're going to be putting their money into these funds for this year?
No, one is that when you invest in mid-cap fund, last 1 year, 1.5 year has been very impressive for these funds. So most important thing while you are making a choice now is that don't expect the same return that you got in the last 1-2 years, and be prepared for big ups and downs, and keep an eye. I don't think these are funds where you invest and sleep over it. Yes, HDFC mid-cap opportunity is one fund which which has proven over time, reasonably long period now, that the kind of stock it will not get into. Likewise, Mirae Asset Emerging Blue Chip looks very impressive on what it does and what it doesn't. BNP Paribas Mid Cap, one has to keep an eye, simply because it has done very well, and it is getting it right most of the time. But this universe where it has to invest, and they have a fairly well stated strategy, particularly listing what they will never do. But still keep an eye on that, because this is a fund. All these funds have a fairly large investment universe to choose from, and a fund manager change is something which I will be very watchful of.
All right, so when you're investing in a mid-cap fund, remember, don't expect the same returns it's given you over the last 1 year. The last 1 year has been fairly good for mid-cap funds. So you have to be able to have the stomach to take a little bit of volatility. And like Dhirendra said, keep an eye on the fund manager. If there's a change in fund manager in a mid-cap fund, it makes a far bigger difference to the performance than it does in multi and in large cap funds. On your screen one more time, Dhirendra's pick for mid-cap funds for this year: the BNP Paribas mid-cap, the Mirae Asset Emerging Blue Chip, and the HDFC mid-cap opportunities fund. Let's move on now to small cap funds. Franklin India Smaller Companies Fund is on that list, the DSP BlackRock Micro Cap Fund, and of course the Reliance Small Cap Fund. This is the only Reliance fund that has popped up so far. Dhirendra, obviously if we are talking about volatility for mid caps, when we talk about small cap funds, we have to be, it's far more volatile. You have to be a very different kind of investor to pick a small cap fund. Tell us who you'd recommend should use a fund like the three that we have on the screen right now.
As part of our selection, the DSP BlackRock Micro Cap Fund. It is among the best performing fund over the last 1 or 2 years. If you look at point-to-point return, and it was among the worst performing fund if you take the whole universe of equity fund. about 2 years back, end of 2013, it will look like one of the worst performing funds. So be prepared for these kind of ups and downs, and the way to navigate these, your investment in such fund has to be that choose one or two funds, be ready for, and feel happy when these funds are doing very poorly and you are making your investments regularly. If you don't have that attitude, these funds could prove to be extremely disappointing. These funds should not be considered as one-time investment, for any one-time investment trying to, bet on any sizable move in the market. And I would like to list one more advantage that, most investors who try to benefit from the market by investing in small cap stocks themselves, these funds actually, provide you great value addition.
All right, small cap funds on your screen right now. Remember, this is our pick for funds that you should be investing in for 2016. But you must remember, we don't mean that you should sell the funds or exit the funds that you have in your portfolio. I'm sure they're very good funds. And of course, if you want us to take a look at the funds you have in your portfolio, write to us on the email ID that's at the bottom of your screen. The idea with this list is if you're making a fresh investment in 2016 and you want to know which funds to invest in, you should very well use the list that's on your screen right now. If you want us to send you a copy of the list, again, get in touch with us on our email ID and someone from our team will email you a copy of the entire list. Small cap funds on your list: Franklin India Smaller Companies, DSP BlackRock Micro Cap Fund, and Reliance Small Cap Fund. These are the three funds on that category. Welcome back. You're watching Investors Guide on ET Now. Thank you for staying with us. This is our big New Year episode. The idea with this episode, like we do every year, is to pick the funds that you should be investing in the new year. Now, we talked about equity funds, multi-cap funds, we talked about large, mid and small cap funds. And if you want that list, if you missed that, send us an email and we'll send it to you. Now let's talk about tax saving funds. And if you haven't done your tax saving for the year, this is the time to do it, and do it right now. All right, so these are aggressive tax savers that are on your screen. The Birla Sun Life Tax Plan, the Reliance Tax Saver. Now, the idea with the aggressive tax saver is that you pick these funds and hold it for longer than the mandated 3 years on your tax saving, which is the lock-in. So you hold it even after the lock-in and you enter with an SIP. It's meant for a younger person with a longer time horizon. Thirendra, tell us how you picked these two funds and why they make your list this year.
The funds are primarily chosen for two reasons. One is that they are configured to be aggressive, with their larger mid and small cap allocation, and they have consistently been so. And the other is that they have performed, based on that strategy. Just having that exposure does not necessarily mean, because anybody who had that allocation, there are other funds with larger allocation to such stocks or that segment of the market. Still, they haven't done as well. So primarily for these two reasons, and as you are saying that one should be holding it for a longer period of time. The reason it's suited for those set of people who expect substantially higher return, and they are not uncomfortable with big ups and downs.
Let's also look at the conservative tax savers, Axis Long Term Equity and Franklin India Tax Shield. Now, Franklin India Tax Shield holds its place from last year, but there is the Axis Long Term Equity, and this is the interesting one. Last year, it was a high-risk tax saver. This year, you've listed it as a conservative tax saver. Has it changed its fund management in the last 1 year? Is it something different about this fund that has moved it from aggressive to conservative?
A lot has happened in the fund. One, it was an extraordinary, it was a very well-performing fund, and it remains so. But it has turned very big, and that has actually driven its character. Now it is much more, stable. Earlier, it was driven by the small and mid-cap allocation. No longer so, or even if it is so, it is significantly, lower given its overall size. It has turned out to be one of the biggest, tax-saving fund in the briefest time period. So this is a very successful fund, and it has changed its character. And but the fundamental thing hasn't changed with the fund. This fund very clearly said what it is supposed to, what it will do. Its focus on quality and stated in a fairly measurable terms. And that is still reflected in the portfolio.
On your screen right now, I'm going to put both of those sets, which is the aggressive and the conservative tax savers. The Birla Sun Life Tax Plan and Reliance Tax Saver are the two aggressive tax savers for this year. The Axis Long Term Equity and the Franklin India Tax Shield are the conservative tax savers for this year. Now remember, If you haven't done your tax saving for the year, these are the funds to use to do them. And if you have any more questions, get back in touch with us. Email ID is at the bottom of your screen. We'll have Dhirendra come in and answer your questions the next time he's in the studio. All right, let's take a look at the balanced funds on the list this year. These are equity-oriented balanced funds. The ICICI Prudential Balanced Advantage is the first on that list. Tata Balanced and Franklin Balanced bring up second and third. Dhirendra, the first two funds were also on the list last year. They both held their positions. Franklin Balanced is a newcomer on this list. Tell us why you find it interesting.
I like this fund for its conservatism, and this fund has always been, the equity allocation, because most balanced funds are large, are equity funds, so to say, with 30, 35% or 40% into fixed income. So they're dominantly equity fund, and they're meant for conservative investors who want a steady take on growth. Here, the balanced fund, which are very, the equity portfolio is very aggressively managed, is generally disappointing for most investors experiencing it, though it might turn out to be more rewarding. So Franklin, Balanced has always been like this, and it was not doing well with its equity allocation, and now looks like it has gotten its momentum back.
All right, so these are our balanced funds. I'm going to put them back on your screen right now. And remember, if you have a question about them, you should get in touch with us. The ICICI Prudential Balanced Advantage, Tata Balanced, and the Franklin Balanced funds. Now, these are equity-oriented balanced funds, which means that at least 60% of the money invested in these funds will go into equity. And, of course, it means that it will be tax-free after 1 year. Get back in touch with us if you have questions about anything you heard, and if you'd like us to email the list of these funds to you, write to us at the email ID that's at the bottom of your screen. Welcome back. You're talking about the best funds to invest in 2016. This is our New Year special episode. A copy of this episode will also be uploaded onto YouTube and our Facebook page if you'd like to look at it one more time. Remember, we talked about equity funds, we talked about tax savers and balanced funds. And if you want a copy of the funds we named on the show, write to us on the email ID that's at the bottom of your screen, and we will email a copy of the funds to you. It's time now to talk about debt funds. Let's start with income funds. Dhirendra, I'll give out the list first, and then I want to talk to you about interest rates. Now, the income funds that Dhirendra has picked for this year is the Birla Sun Life Dynamic Bond Fund, the Franklin India Dynamic Accrual Fund, and the SBI Corporate Bond Fund. Now, we are obviously in a regime right now where interest rates are going to continuously come down over the course of 2016, at least so we hope. In that sort of a regime, Dhirendra, what sort of debt funds should we be using? Because we know there are debt funds that move inversely to interest rates. For someone who's holding fixed deposits, if you have to reinvest your money, if your fixed deposit has matured and you get that money out and you're going to reinvest it, it's very likely that you'll be reinvesting at a lower interest rate. So for those people, Dhirendra, are income funds more interesting?
Yes, I think, and that is what has driving this selection. Investors who are, trying to leverage this opportunity of declining interest rate and benefiting from that. And the funds here have good track record of leveraging such opportunity. And the third one, which is the SBI Accrual Fund, that it is trying to optimize returns. So that could be one fund which will be very useful for investors who are trying to optimize their return while interest rates go down, because rolling your fixed deposit will not translate, will yield you lower return, and it will be taxable. So these funds are relevant for investors taking a long-term view on fixed income, trying to optimize their return, and near-term opportunity is the interest rate fall.
All right, so if you're wondering which funds that you should be using right now, I'm going to put that on your screen one more time. There's the Birla Sun Life Dynamic Bond Fund, the Franklin India Dynamic Accrual Fund, and the SBI Corporate Bond Fund. If you have questions about investing in debt funds, write to us on the email ID at the bottom of your screen. Final category on the show. These are funds to invest in for 2016. Short-term debt funds. Franklin India Ultra Short-Term Bond Fund. It's the super institutional plan. The Principal Debt Opportunities Fund, and of course the Taurus Ultra Short-Term Fund. These are the three funds that make the list. Dhirendra, the super institutional plan, do retail investors have access to it, and how is it different from a regular short-term debt fund?
Yes, for some historic reason, the super institutional plan is what it used to be, but now all kind of investors are eligible to invest in this. In fact, what happened about 2 years back, that SEBI said that mutual fund companies can't have multiple plans with different minimums in the same fund. So fund companies were allowed to choose one fund which they will retain, and rest of them were closed for new subscription. That is how this name prevails, but all investors can invest in this fund. And the reason, the basis on which these funds were chosen was relatively lower cost and higher return.
Well, Dhirendra, obviously one of the reasons why a lot of investors will be using short-term funds is if they're looking to buy homes, they've put together the down payment and they're now in the process of actually shortlisting a home. Is this the list of funds that fit that particular category? So if I have money in hand right now that I know what the specific use is, so I'm putting it aside, say, for 3 months or for 6 months, short-term funds, these are the ones that I should be using?
Yes, exactly. While you're looking for your home and you want to, optimize the return, and that's a large amount of money which is which is waiting, and you are much better off. I think you are likely to get twice as much as what you will earn in a savings bank account.
All right, so it beats the savings bank account, and remember, it's a short-term fund, so you should actually be investing something that you're holding for the next 6 months or the next 3 months. Try and avoid holding it for a very long period of time. Then if you go past 3 years, ideally you should be using a balanced fund, and if you go past 5 years, you should be using one of the equity funds that we named earlier on the show. Short-term debt funds to invest in for 2016, Franklin India Ultra Short-Term Bond Fund Super Institutional Plan. Yes, that entire thing is the name of one fund. Principal Debt Opportunities is the next on the list, and Taurus Ultra Short-Term Bond Fund is coming in at number 3rd. These are short-term funds to invest in for 2016. Dhirendra, thank you so much for picking out funds for this year for us. Of course, this is, like I told you, this is the list that we will refer to on the show as well for the rest of the year. So we'll track performance of each of these funds and we'll tell you if you need to make any changes. But for now, this is the list you should be using if you're making a fresh investment this year. A copy of all of this will be uploaded on our Facebook page. It will be uploaded on our YouTube page. And you can write to us if you have any questions. Thank you so much for watching. I wish you a wonderful year ahead. I hope you have a wonderful 2016. Stay with ET Now, an Investor's Guide, as we help you through investments in the new year.